Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the mini S&P 500 futures contract. And actually what we're looking at here is a chart of our proprietary dynamics, our proprietary indicators known as our intraday dynamics. And it's essentially what we use to kind of gauge where the market is likely to head. And as you can see, generally green means the bulls are in favor and the market is likely to head higher. Red means that the market is likely to head lower. For instance, look at this red right here. We have red all the way right here. We call this a quadruple threat bearish bias. Red right there. What do we get eventually? The next day, a huge move lower. Did it stick? No. Actually, we got to move higher the day following. Why? Well, you can see mostly green. This is a triple threat bullish bias right here. We did have one antithetical indication, but overall was bullishness here. We actually did have a break above the trend on this day, and since then, as you can see, this is of course Friday, the 8th of January 2010. Since then, as you can see, we've had this pretty nice little drift higher. As you can see, of course, this was year-end selling. People sell their losers so they look like they weren't on their books, and then they just buy them back at the open of the next new year. And as you can see, the market is nicely drifted higher. Just a couple little retests of essentially this trend right here. Nice little retest right there. Early session retest this morning, kind of a whipsaw morning session, but right back to the slow ascension higher. But having said that, we do see a little bit of a divergence right here in the market, as you can see developing. We do have a triple threat bullish bias here. If you include the trend and the trend, that's a quadruple threat bullish bias, and a quintuplet. Maybe somebody can help me out there. Bullish bias will develop if we get the price technicals to confirm, which will be a break above the 1136 to 1140 level. In fact, yesterday's high was right at around 3850, so we'll call it 3850. So we're right trusting that high from yesterday. Are we going to break above it? Well, it remains to be seen. We do have this thorn in the side of the bullishness as it stands right now. But if we switch over and take a look at the daily chart, so these are the intraday dynamics. If we take a look at the daily chart right here, as you can see, our VIX equity call system that we coded recently, just to give you guys an example of another methodology, has actually exited its short position. And as you can see, the complacency is rampant in terms of the VIX. We do have moderate complacency. At least this is a key level. If you can see right here, boom, sell off. On this level, sell off. On this level, sell off. We come down to this level. Didn't get much of a sell off. Of course, this is end of the year and new year forces at work here, but we certainly are at the level that historically has precluded a sell off. And so certainly we're expecting a sell-off in terms of this indication, but certainly we will look for the actual short indication signal, and we'll certainly make you aware of that when it happens. From looking at a daily chart of the cash market, as you can see, we're from an official market timing basis, we're still 100% bullish on the market, comfortably so. Just had that nice break and retest above. Break of the horizontal resistance, retest of both the trend and the price technical horizontal level, and blasting on up to 1140, we'll call it. So the S&P kind of likes to key off these 40 and 80 levels, not so much 60 or 50 or something like that. So kind of might want to watch the 1140 level for any kind of indications, but from a price technical trend following momentum and directional movement perspective, as you can see, the market remains fully bullish, and we are now sitting on an open gain since going back to officially bullish of 180 points, and that's over 600 points in market timing, official market timing calls over the last 16 months, as we've certainly alerted you to as a subscriber of our free market analysis and trading video. And we're going to go look, we'll just take a look at a couple of our systems, see how we've been doing. Kind of caught short in a short position on the grind today. Nice little winner right there, Day Trader 5.0. Catching some winners, catching a couple losers, essentially a little bit to the plus side right there. 6.0 actually caught a loser there. Beautiful winner on the Day Trader 7.0, 8.0 actually also in a short position. Market seems to be rolling over a little bit right now in the Dow. This is some very strong resistance around 540, as you can see. Test, head and shoulder, boom, test, retest, fake out, breakout, and now we're back below. I'm probably going to roll over there, at least in terms of intraday. Day Trader 10.0 catching a couple of winners there. Swing System 5.0, probably our best swing system, as you can see. Look at it right there. Beautiful ascension higher. And we're going to go ahead and scroll down and look at, actually we don't have those here, but Day Trader 19.0, 17.0 catching some nice moves there. But we're running out of time, so we're going to go ahead and bring over, oh, here we go. We can go ahead and look at, don't think we got to look at these last time. Beautiful. These are our new day traders based on our intraday dynamics, as we've mentioned, and as you can see, some nice, comfortable, non-optimized, non-curve fitted. Mind you, a very key component that you don't curve fit and optimize your data just so that it looks good on the chart, because that's not going to make anybody any money over time. Also, just wanted to touch on one thing. We'll bring that out and bring this back in. Get a lot of questions about adjusting our drawdown. Very popular portfolio, dual day trader. It's only $5,000 portfolio. As you can see, the maximum drawdown, however, has been 112%. You can actually scroll down and look at that. And there, as you can see, 112%, about almost $6,000 maximum drawdown. The average drawdown is considerably less. But if you're interested in less risk, and of course less return than 38% a month, then all you have to do is trade the same portfolio and simply increase your capital requirement. For instance, a $10,000 portfolio trading the dual day trader ES is going to have 19% return per month, but only have 50% drawdown, 56% maximum drawdown. If you want a little less risk, if you want more consistent returns over time with less risk, you can go to 20,000. Right there, you have a 28% maximum risk and a 10% return a month. Now, that's 120% per year. This course is using $26 for every round turn in both slippage and commission factored into every trade. A $20,000 portfolio will return $10,000 a month. So that's for the more conservative clientele. But here's how we've done over the last 9 days or so. You can see the MapDT version 4.0 HR is the standout at a $2,000 gain. 8%, almost 10% from what I'm looking at. The Map Black, the most diversified portfolio, is up about 7% right there. But also wanted to touch on a sales event that we've kind of extended, but not really, just kind of giving other people an opportunity to get in at some substantial savings. And what that is the MiniAnalyst.com's yearly sales event. Now, this isn't our annual Double Your Money event, but this is our yearly sales event. So what that means is when you subscribe for a year, let's say 2010, or just a year from the date that you subscribe, you'll save an extra 25% off of your portfolio. What's more, not only will you save an extra 25% off a yearly subscription, but you'll also save over 20% on commissions, which is very key as well. Brokers get involved in this special offer, so you're going to save an extra over 20% on your commissions. You're going to save 25% on your portfolio. So what you do is you just go and enter that promo code. Go ahead and add, let's say, the dual day trader ES. Make sure you enter a quantity of 4, and that subscription code was yearly, I believe, yearly subscription. Oh, shucks. What was that subscription code? Yearly subscription event. You could just copy that and go back and paste it in there. Yearly subscription event, and hit apply. So you have 4 in there. For the MapDT version 4.0, instead of $10,000, you would save $2,500 off a yearly subscription and save on commissions too. We hope you've enjoyed this quick look at the market, our official market timing biases, and a couple of special offers that we have available to you. If you have any questions, go to the website and chat with the support team live, or shoot us an email to admin@MiniAnalyst.com. And we hope you guys are having a great new year and enjoying the snow where you got it. We'll see you next time.